Has the real estate market reached rock bottom? That's a great question. So in today's video, we're bringing the whole team together to talk about exactly that, different aspects. Firstly, I'll say if you found any value of this, if you found it entertaining, please subscribe and please like this video. So, the truth is no one has a crystal ball. No one can tell you what's going to happen in the marketplace. But, there is a lot of misinformation out there. There's a lot of catchy headlines. So we want to really kind of dive into the facts and figures. And that's why we got the whole team. We want to talk about what's really happening on the ground, across mortgages, rentals, short-term rentals, and obviously real estate. So let's dive in. So the numbers, let's talk about the actual numbers first, and then we'll kind of get into the analysis and what's really happening, boots on the ground. So sales are down almost 50% year over year. So that's comparing October 2021 to October 2022. Prices are down slightly, 5.7%. And they're down 18.4% from their peak in February. That's kind of when prices peaked. And really, like Jordan and I like to say, we're back to a year ago. We're back to basically August 2021 pricing. The affordability is a bit different, and we'll get into that when we talk to Ruth, our mortgage specialist. But the other important thing to know, it depends on the property and it depends on the area you're talking about, right? So detached houses in the 905 are down almost 12%, where condos in the 416 are basically flat from October 2021. So it's kind of interesting. And then if you sort of dig a little deeper, new listings are down 11.6%. So that's what we're going to talk about, is sellers are also hitting pause while buyers are hitting pause. The sales to new listing ratio, so that's at 46%. So typically a strong seller's market, that's above 60%, which we've seen for the past number of years. And a strong buyer's market would be 40% or below. And we're at about 1.7 months of inventory across the city. That's getting more healthy. When things were crazy, that was like 0.8 of a month. In sort of healthy markets, they'll say it should be about 3 months of inventory. So we're not quite there yet. And that's why there's some interesting things, happening. It's sort of a strange marketplace. Inventories are up a little bit, but not significantly. And, buyers are kind of hitting pause. Well, you know what? I think I'll ask Jordan kind of what he's seeing on the marketplace. Jordan Newman.
Yeah, it's a really interesting time, as you said. We're seeing, and I'm glad you brought up niches, Paul, because it really depends on both the niches of geographically and condo, semi, luxury. So when we're talking about the market, there really isn't one market. There's probably 6 or 7 markets. So it's important to look at that. We're going to sort of talk about some generalities, but when we're looking at somebody's house, we're really looking at we're really breaking it down into niches. But in general, what I'm seeing is sellers are holding strong and not necessarily selling unless they have to. So I don't know if you've noticed, it seems like there's a lot of estate sales. Well, why there's a lot of estate sales? Well, we just happen to notice more estate sales because they have to essentially sell them. They're, someone has passed on and they're going to sell that home and divide up the money, and therefore that home has to be sold. So when a home has to be sold, where it's getting sold. But other than that, people are tending to play it a little bit more cautiously. We see that, for example, in investors. If somebody's got a cash flow property and they were trying to sell it at the peak and they're not getting their price, they're generally not selling it or taking it off the market. So on the other side, buyers are cautious, and this, I find personally, is directly related to mortgage rates. So they're really, really cautious as to when to get in the market as it relates to mortgage rates. And I think now, from that perspective, I think they're just starting to dip their toe back in. I do see the odd house still selling with multiple offers. I had a couple of them actually last week in out places of Richmond Hill and Aurora. So even out in the burbs, which have really been hit hard, I have seen some multiple offers. Of course, those are in holdback situations where the prices have been kept low. Um, uh, but most properties are selling with just one offer. So, maybe the house has been out there. They tried to sell it in a week and it's been week, 2 weeks, 3 weeks, 4 weeks. And eventually they are selling as probably sellers are adjusting their expectations. And to that, we have seen a number of properties that are getting offers, but they don't sell. So in our neighborhood, Paul, for example, you get, say, a typical, let's say it was a house on the market for or the expectation was 1.4. In their minds, they're putting on the market for 1.4 or a little bit higher. They're not getting that. Then maybe they pull back and they go, let's try the multiple offer situation after a month. And they don't get at a lower number. Maybe they even go to 99999 and they get an offer of maybe of 1.2. They don't take that offer at 1.2, and then they potentially just take it off the market entirely. Or maybe there's even a step 3 where they're going to maybe a number that they'll settled on of say 1.3. So you're often seeing on one property, it's been on the market for like 3 different times. It's been at this number, it's been at this number, and it's been at this number. And now we're also starting to see, and we've actually even done this, we're starting to see houses that are put on the market both for sale and for rent. And if somebody doesn't get a proper sale number, or in their mind, the number that they want, they'll rent and hang on for 3, 4, 6 months or what have you. They might even sign a longer term lease, but generally they're moving into a shorter term situation. So to sum up, I would say, like personally, in the market, I think it's an absolutely fantastic time to upsize, because when you look at the numbers, particularly if you're going from condo, and again, let's look at the niches. Let's just say condo, semi, detached. If you're looking at those 3 categories, if you're in a condo in the GTA, you are basically flat to where you were last year. And let's say you want to buy your first house and it's a semi, well, they're down about 8%. So right off the top, on average, you've just saved about $100,000. So it's a terrific opportunity to go from condo to semi, or even better, if you're going from condo to detached, because detached are down 10% versus this time last year. So it's a terrific time to look at upsizing. If people are bursting at the seams in their condo, they're going to get about what they got this time last year. So that's what I'm seeing. Ben, what are you seeing in the rental market?
The rental market is trending really up across the board because there's a lot of pressure to get back into rentals now. The average 1-bedroom apartment has seen about a 20% raise since last year this time, and they're up to nearly $2,500 a month. This is again being driven because vacancy is going down, immigration is back up, people are returning to the city. And what this is doing is basically it's making rentals get snapped up very quickly for the most part. We're seeing really competitive applications for a lot of rents, including some people offering well above what the listing price is for the rental or offering increased months of rent. So this could really be a good time if you're a landlord, but it can be a challenging time if you're a tenant. I would say the one difference we are seeing, though, is, as you kind of brought up, higher end rentals. So we're seeing a lot of full houses sort of hit the market because they're not selling. And this has kind of led to less competitive end for higher end rentals. Basically, what we're seeing right now is capital's getting expensive. Residential and commercial construction is slowing. So this combined with projects that aren't going forward as well basically means that our rental supply that's already getting pretty low is going to essentially disappear.
And Jordan alluded to it, but pre-construction sales, I saw the number for September, and they were down 89%. And I think new home sales, like brand new construction homes, was down like 95%. So that market is basically non-existent. And what you're seeing is developers, and I know some, and we've been talking, capital is expensive, construction costs are expensive, development charges are expensive and are going up. So they're really halting projects right now. They're not launching any new projects because why would you? You can't sell them anyway. And they're focused on finishing, the ones that have shovels in the ground. And you will see some cancellations. The forecast is probably 5% of the projects out there will be canceled because they sold at prices below, what the developers can make money at. So, really what we're seeing is a slowdown in construction at a time when we need it more than ever. Like Ben said, immigration, the government of Canada changed up to the numbers again for the forecasted immigration, how many people are going to let in the country, and they're doing that partially to keep the GDP high. It's a little trick they do. But really what we're trying to tell people is, hey, listen, this is a great time to buy. In a few years, when buyers come back, interest rates kind of come down a little bit again. There's going to be no supply, and Jordan and I and now Ben have been in these markets where it's crazy and it's not fun to buy, and we don't want that again. We know why all this is happening. It's happening because the Bank of Canada is raising interest rates to combat inflation, and interestingly, just released that the inflation number held steady at 6.9%. The market was actually forecasting it to be 1% or even a little bit higher. So it'll be interesting to see how the Bank of Canada interprets that in their next meeting. And just remember, like if the inflation number is flat month to month, 6.9%, what that means is it's not raising, right? Because it's comparing a year ago, right? So what we're seeing is inflation, the growth has stopped, which is good. It's, we're sort of achieving what we want to achieve. If you have any questions, please shoot us an email, info@thinktio.ca, and please like and subscribe to this video so we'll know to make more great content like this each and every week. Talk soon.